Welcome to this explainer. Right now, we're unpacking a massive, sudden shift in the artificial intelligence landscape. You see, for years, Anthropic, the company behind the Claude AI models, has been kind of the lone wolf. They were the last major AI lab without its own custom computer chips. They've actually actively avoided building hardware. But suddenly, all of that has changed. They are pivoting hard, and the sheer scale of the money and the infrastructure involved here is honestly staggering. So we're going to unravel the mystery of exactly why Anthropic is suddenly forced to build its own silicon, the massive financial web that's keeping them afloat right now, and what this incredibly high-stakes gamble actually means for everyone who uses AI. Okay, let's dive right into this with a number that perfectly captures just how serious they are: $485,000. Anthropic recently posted this unusually blunt job listing for chip designers, and they're offering a top-end salary of $485,000 a year. Now, that is way above typical software engineering bands. But what they're asking for is just as important as what they're paying. They specifically want engineers who have personally contributed to shipping a real chip design. They definitely do not want managers who just watched it happen from the sidelines. They want people who are totally comfortable making massive decisions without a huge team backing them up. This tells us the team they're building is small, incredibly focused, and moving with extreme urgency. And that urgency just exploded into public view during what was a remarkably chaotic first week of August. On August 4th, news breaks that Anthropic locked in a massive 6-year deal for a dedicated data center in Norway, securing 133 megawatts of cold Norwegian power running on brand new NVIDIA hardware. Literally the very next day, a business report officially confirms the existence of their in-house silicon team. And then, by August 6th, rumors are absolutely swirling about a potential $6 billion acquisition of an AI startup called Descartes, which is a company focused on making existing chips run more efficiently. Anthropic is moving mountains here, and to understand why they're suddenly rushing, we really have to look at how they currently operate.
That brings us to Section 2, the billion-dollar renting trap, the risks of circular financing.
Let's peel back the first layer of this dilemma. Right now, Anthropic relies heavily on leased hardware. When you buy an AI accelerator outright, it's a lot like buying a sports car, right? It starts losing its value the literal moment the next generation ships, which is usually in about a year. So renting seems pretty smart. It pushes the risk of obsolete hardware onto someone else. But here's the catch. Leasing is a promise to keep paying even if your revenue drops. So Anthropic is essentially trading the risk of owning an obsolete, depreciating asset for the massive, massive risk of owing billions of dollars on hardware it doesn't even own. And the flow of this money creates what critics are calling a circular financing loop. Here's how it plays out. Google puts equity funding into Anthropic. Anthropic then turns right around and commits tens of billions of dollars to lease Google's very own custom chips. To actually afford these leases, Anthropic secures massive debt packages from private equity firms, think Apollo and Blackstone. This cash infusion helps lift Anthropic's overall valuation, but a huge slice of that valuation just gets spent right back on Google's hardware. It's this wild, complex cycle where an investor's money essentially helps fund its own hardware sales. To put the sheer scale of this into perspective, Apollo Global Management and Blackstone recently finalized a $35 billion debt package specifically to fund Anthropic's leasing of Google chips. $35 billion. And incredibly, reports are suggesting Blackstone is already floating a second debt package, potentially worth another $36 billion, tied to the exact same strategy. We're talking about tens of billions of dollars in real debt, with real payment schedules, all built on the assumption that demand for Claude continues to climb at a steep rate. Which leads us to Section 3, the true hardware bottleneck. And as you'll see, it's not about the money. Because honestly, as astronomical as these numbers are, throwing tens of billions of dollars at the problem doesn't actually solve the core issue. What is literally holding the entire AI industry back right now is a process called CoWoS, or advanced packaging. Now, this isn't some software bug or lack of funding. It is the highly complex, physical manufacturing process of stacking chips and high-bandwidth memory tightly together. Building a new advanced packaging line takes years, and the highly specialized equipment required, well, it comes from just a handful of suppliers who have their own massive waiting lists. And one company dominates this bottleneck. NVIDIA alone is estimated to control around 60% of the world's CoWoS packaging capacity. Because this process is so incredibly difficult and so highly constrained, the earliest open manufacturing slots at TSMC, which is the world's premier chip manufacturer, are already booked solid all the way out to 2028. This is a purely physical capacity problem. A trillion-dollar valuation means absolutely nothing if the manufacturing capacity literally does not exist yet. Which brings us to this powerful realization from our sources. And this quote really hits the nail on the head. When a lab announces billions in compute spending, what it's really announcing is a place in line. The line is the product. Every single AI lab in the world is standing in the exact same line, waiting for the exact same suppliers. Anthropic's massive spending spree doesn't magically create more chips today. It just secures their spot in a very, very long queue. Section 4. Late to the Silicon Race. Anthropic's steep catch-up game. So while building their own chips is a bold move, Anthropic is actually arriving really late to the party. Just think about their biggest competitors. Google already runs its own TPU line with 192 gigabytes of memory. Amazon has Trainium 3. Microsoft has its Maya 200 chips. The tech giants already have their own locked-in silicon ecosystems. Anthropic has basically been stuck between a rock and a hard place. Either lock yourself into someone else's closed ecosystem or rent generic chips that come with the absolute worst waiting line on the planet. Building their own is basically their only long-term escape hatch. But, what does building a chip actually entail in 2026? Anthropic isn't going to just go open a massive factory in the desert. The modern reality follows 3 steps. Step 1, Anthropic's new, highly paid team designs the architecture in-house. Step 2, they hand that design over to a physical implementation partner, somebody like Broadcom or Marvell. And step 3, that partner turns the design into something that can actually be manufactured at a foundry like TSMC. This handoff process is incredibly difficult, which is exactly why they are hiring engineers who have flawlessly executed it before. And what exactly will they be building? Well, all signals point to inference chips, realistically landing around 2028. Training chips are notoriously brutal to get right, and NVIDIA's dominance there is pretty much absolute. But inference, which is the day-to-day running of the model when you or I ask Claude a question, that is where the massive daily volume and the exploding costs live. A custom chip tuned specifically for Claude's unique operations and literally nothing else is a narrow bet that could drastically cut the enormous margins they're currently paying to third parties. Now, it's easy to announce a chip, but how will we know when this vaporware becomes actual hardware? Here is a practical checklist you can monitor over the next couple of years. First, watch for a named team leader. A project this big is not going to stay anonymous for long. Second, listen for a design partner like Broadcom, subtly mentioning a new, large, anonymous customer in an earnings call. And third, watch for leaks regarding foundry allocation at TSMC. You simply cannot hide a manufacturing booking of that size. When those 3 things happen, the chip is real. Section 5. What it means for users. Margins, tokens, and rate limits. Let's bring this massive macroeconomic story back down to earth for a minute. While a custom Anthropic chip might be years away, those massive data center and leasing deals we discussed earlier, they have immediate benefits today. The near-term win for everyday users isn't necessarily a smarter AI model, it's reliability. It means fewer frustrating capacity errors during your workflows. It means AI agents can run longer tasks without timing out halfway through. And historically, across the industry, when an AI lab shrinks the middleman by owning or securing dedicated hardware, those savings eventually trickle down to us in the form of cheaper tokens for developers and much larger free tiers for everyday users. And ensuring that reliability is absolutely crucial right now because of the massive enterprise demand that is actively driving this whole compute crunch. Take their recent partnership with Millennium Management, for example, a massive hedge fund. Anthropic engineers are literally sitting inside the fund's teams co-developing a Claude-powered digital risk analyst to evaluate financial positions. This is deep, supervised enterprise integration. This level of institutional trust is exactly why demand is skyrocketing, making the scarcity of chips so incredibly painful for Anthropic. But, it all leaves us with a pretty monumental overhang. Anthropic is sprinting to secure compute power, piling up tens of billions of dollars in hardware debt and lease commitments based entirely on the premise of endless growth. But what if that growth curve flattens out? Or if enterprise AI adoption suddenly stalls? Who exactly pays the price for all that hardware debt? It's a massive financial tightrope walk, and the entire AI industry is watching to see if Anthropic can make it across. Thank you for joining this explainer. Keep your eyes on those TSMC manufacturing allocations and keep learning.